the sky's the limit. Things could get pretty crazy if all of these promises do come to fruition in terms of a strategic Bitcoin reserve. You have a growing list of states that have already put forth bills to accumulate Bitcoin for their state treasury. To think that there would be like legitimate discussions of the US government purchasing Bitcoin, people would laugh you out of the room if you said that 2 years ago. Bitcoin is really the most like risk-off allocation you could possibly have. It's outside money, it's transparent monetary policy, immutable. All these things makes it a risk-off asset. Given the amazing year that these ETFs had in terms of inflows last year, it could be even magnitudes larger this year as all of these wirehouses and financial firms actually allow their underlying clients to get access to these things.
What do you think happens in 2025? Because there's so much happening. There's so much in store for 2025. What are you kind of expecting?
It's a wild timeline we're in, right? Like it's, there was a few sort of pivotal turning points over the past 12 months that allowed us to be on this current timeline. It's pretty amazing to look at where we are right now and just think back even a year or 2 years ago, and to think that there would be like legitimate discussions of the US government perhaps purchasing Bitcoin. People would laugh you out of the room if you said that 2 years ago. And now that's very much in the zeitgeist and legitimately being considered. And so it's hard to say what happens this year, to be totally honest. I usually refrain from making specific price predictions, but, up is generally my vibe and my sense at this point. Like, I think I don't see how we don't continue to go up from here. I also think, if you look at the success of the ETFs last year was astounding, like the most successful financial products ever launched. But with the huge caveat or asterisk that like most of the wirehouses and traditional financial firms have still not even turned on support for these ETFs. And so I think that could be something this year that catches people off guard, that, even given the amazing year that these ETFs had in terms of inflows last year, it could be even, magnitudes larger this year as all of these wirehouses and financial firms actually allow their underlying clients to get access to these things. So that's one component. And then obviously this, the sort of overarching nation state game theory that appears to be playing out. There's obviously been tons of rumors about, countries ex-US that may already be accumulating Bitcoin on their treasuries or even mining Bitcoin. That seems likely in my mind, just from, again, a game theory perspective of if the United States is beginning to talk about this idea, it would make sense to try to front run them a little bit. And so, yeah, super excited about this year. And just, I think the sky's the limit to some extent. I think things could get pretty crazy if all of these promises do come to fruition in terms of a strategic Bitcoin reserve. And I think one thing that most people aren't thinking about, at least if you're like on the outside of the space or on the periphery of Bitcoin, is like you've probably heard about the strategic Bitcoin reserve. You've heard some of Trump's comments, but what's going less reported or underreported is the same thing is happening at the state level. And so I think it's much more likely that we actually get state level legislation for Bitcoin reserves. I think that's even more likely than at the federal level, honestly. And so you have a growing list of states that have already put forth bills to accumulate Bitcoin for their state treasury. Some of those being some of the largest states, like Texas, which I believe is, hopefully I'm getting this right, but it's like the eighth or 12th. I don't know why those two numbers are coming to mind, but it's, roughly a top 10 GDP state. If Texas were its own country, that's how large the GDP of Texas is. So that's, I think, one element that people are underappreciating about all of this talk around, finally some recognition that like Bitcoin is this strategic asset. Like it is the greatest store of value we've ever seen. So yeah, maybe you should accumulate some of it for your treasury. So that's, I think, some of the most exciting things as we head into this year. But like I said at the beginning, like it is somewhat surreal to look around and see where we are right now in this moment. And sort of rewind a couple years and just, think about how different sort of the narratives and just the general zeitgeist was at that time.
Absolutely, yeah. And it's interesting when we look at the strategic Bitcoin reserve. I thought it was not likely just a few months ago, like literally like 4 months ago. I was like, that's not gonna happen this cycle.
Yeah.
And now I'm completely flipped. I'm like, it would surprise me actually if we have like end of Q2 and we still have nothing of like official news. Like that's almost would surprise me now a lot. And you can see maybe
I agree, just in the sense that, just knowing kind of, who the person and the man that Donald Trump is, now that he and his team, the people around him, have signaled their intent to do this, there will be at least, some form of backlash if these things don't happen. And whether that's warranted or not, I think is another question. But it's just the reality of, I don't think Trump himself wants to be seen or perceived in a light where he said something to this cohort of voters who ended up voting for him, and he doesn't follow through on that plan. Like I think, even just the notion of like, if he doesn't free Ross on day one, like I think that'll be a strong signal that maybe, we've gotten a little overhyped in this narrative around this new administration if he doesn't actually follow through on that one, because there's like really no political backlash that he would receive from doing that. It seems pretty consensus across the board that is something that should occur. And he made the promise. So it's a very sort of easy win for him. And it's also something that he promised. And so if he does follow through with that on day one, there's been reports this week that there's roughly 100 executive orders that he's going to sign on Monday. I don't know when this podcast is coming out, but we're recording it on the 17th. So inauguration day is on Monday. But yeah, there's been reports that, he's planning on signing a number of executive orders. And so I expect Ross being freed to be in there. And I think it's likely, to your point, even if you just look at like Polymarket or other betting market odds, that's just been the likelihood of an SBR or some executive order to the effect of, doing something with Bitcoin as a strategic reserve asset. That probability has been inching up over the past several weeks. I think it's now at like 65% on Polymarket or something like that. The interesting thing about those betting markets, though, is like, well, how do you define? I don't know exactly how they're defining SBR, right? Because there could be a number of different flavors of what a piece of legislation looks like, whether it's an actual piece of legislation that goes through Congress or if it's just an executive order on day one. So there's a bunch of different sort of variations of what that could look like. Are they just holding the existing Bitcoin? Are they actually committing to buying incremental Bitcoin? Is a pretty big distinction in terms of I think, like how people will perceive it. That said, I think any movement in that direction that signals, again, he's following through on these initial promises and what he campaigned on, I think will be extremely bullish for sort of near-term price movement. But yeah, it's very, very exciting.
Absolutely. And it's also interesting because it is, if it doesn't change legislation in a big way, it's probably his last turns or his last 4 years. And he's also, how old is he? Like 70, something like that? Or like
he's almost
like
80. Old? Yeah, he's
almost 80,
pretty old.
So it probably be his last things that he does in a big way in public. I think maybe he surprises us. I don't know.
Yeah.
So it's also something where like, okay, this last 4 years, it's kind of building or ruining his legacy. This is where it's like he can make a lot of things where he's known in 50 years as that kind of president. And I think it is a little bit in his mind of like, okay, Bitcoin might be something. There's so many clever people around me talking about it. If I'm the first president to embrace that, I will be the first president to embrace Bitcoin.
Yeah.
And this will be for something forever. So I think there's some legacy aspect to it where he cares about that things.
Absolutely. There's a couple elements there to pull on. It's just the reality of who he's surrounded himself with. So this isn't just coming from him. It's not just his own crafted narrative. it's his family, it's his confidants, it's people he's surrounded himself with that are also supportive of the asset. And so, yeah, to your point, I think he really does care about, what his lasting legacy is. And doing something with Bitcoin is like, it's an easy win. Like there's not a lot of downside, particularly given all the signaling that he's already done. Like the only downside is if he doesn't follow through with it at this point, because the only people he's going to potentially piss off are like the Elizabeth Warrens of the world, which like he's probably happy to do that. So like I don't think that that's a concern of his. And so he has the power to do various things, and I think yeah, to your point, he does. He certainly cares about his legacy, cares about what people think of him. And so yeah, I think you kind of nailed it. Like I would be more surprised if we don't see some follow through on a lot of these things.
Absolutely. And one thing that you mentioned that's actually a really good point of the ETFs, because we know ETFs, they take time. It's not like you turn the ETFs on and you have all the clients and there's a lot of money out of the sun coming in. It takes time. And I think this is really coming full swing in year 2, 3, 4. And if I'm not mistaken, you're also coming from traditional finance background. Just to give the audience a background, what did you do there?
Yeah, sure. So I started my career in the traditional finance world. Worked on Wall Street for a number of years. I worked at a company called a big private bank called Brown Brothers Harriman, and most of what I did there, initially started on sort of the relationship front office side of things, and then ultimately sort of migrated to effectively a centralized investment team within the private bank there. So we managed roughly 60 billion in assets, and that was mostly high net worth private clients, some smaller endowments and foundations mixed in there. But really, my job and our goals were to construct portfolios, so both internal and external investment strategies. So we had a very concentrated roster of managers. Call it 20 different strategies across the asset class spectrum that then comprised the portfolios of our underlying clients. And it was a fascinating role because really what I was tasked with doing was going out and diligencing any and all fund managers that were, one, most importantly, aligned with our sort of investment philosophy at the firm, which, Brown Brothers is a very old institution. It was founded in 1818. I think it's the oldest and largest private bank in America. And so you could imagine it's a very sort of conservative institution, very first principles thinkers. And they also, are very much sort of disciples of Warren Buffett, if you will. So very cash flow oriented, looking for, managers who appreciate quality business models, management excellence, all the sort of tenets of traditional value investing. And so, my role was going out and diligencing fund managers across the asset class spectrum and deciding whether or not to bring them onto the platform and offer those funds to our underlying clients. And so really, day to day, I was getting to pick the brains of some of the smartest investors in the world, which, I was pretty young at the time, which was an interesting dynamic of like, who am I to talk to these guys who have made, in some cases like billions of dollars trading, whatever they're trading throughout their career. But, it was in that sense an amazing learning opportunity because I really got to hone my own personal investment philosophy. And so I was at the bank until end of 2021. But, I personally on the side started learning about Bitcoin in sort of late 17. So that bull run and into early 18, I had, a typical journey of like an altcoin phase where, it was funny because sitting at a bank, I actually was interested in Ripple XRP at the time because I was like, oh, like all the banks are going to use this. This is so brilliant. Like, also I certainly had a unit bias at the time. I was like, I kind of missed Bitcoin. Like I need to find something else. And so I went down that path for probably 6 or 9 months. And then that's when sort of that bear market ensued and sort of the bottom started falling out of the market. And I noticed a few things, but the main one was like, okay, everything's falling here, but Bitcoin is falling way less than a lot of these other assets. So what is different? What am I missing about Bitcoin in particular? And so that's when I sort of really started to go down the rabbit hole in earnest and learn about the history of money. I studied history and economics in college, but never once sort of learned about Austrian economics, unfortunately. So began to really dig into that. What is money? The history of money. And then became more and more convinced that Bitcoin was fundamentally different than all these other assets, and was just stacking as aggressively as I could, sort of 18, 19 into 20, and then into 21. This sort of growing interest in Bitcoin, this passion for it, just became so large that I kind of realized I've got to do something here. I can't just continue to work in traditional finance and not be at least occupationally driven by this increasing passion that I have in my personal life. And so I started to think about next steps and leaving the bank. And it was funny at the time because they had not in the private banking line of business, but in another line of business, they had sort of a digital asset working group that was thinking through basically how do we use blockchain without thinking about Bitcoin. And so I considered momentarily okay, do I try to help those guys figure out the signal of Bitcoin and not necessarily be worried about the blockchain technology, and kind of realize ultimately that would be an arduous path and probably not not too fun to try to convince others of that. And so I realized it probably made sense to just leave the bank. And so I left in late 21 and interestingly took a job at Coinbase. And I say interestingly because, at that time I was already sort of heavily convicted in Bitcoin specifically and very skeptical of the rest of the crypto market. But I saw it as an opportunity to effectively codify my thesis, force myself to dig into some of these other assets, these other protocols, and verify for myself that they were fundamentally flawed. And it was also just a good opportunity. They were effectively building out a dedicated research team within the institutional line of business. So it was familiar to me in the sense of working with large pools of capital and thinking about investment strategies and producing research. And so I was at Coinbase for about 12 months. And always sort of knew that was going to be a stepping stone to something that was Bitcoin specific. And so I used that time again, as I mentioned, to really codify my Bitcoin thesis. And I came out the other side even more convicted in Bitcoin is the thing here. And it's much different than the rest of this market. And so from there, I started to think about, okay, well, what are the next steps from here in terms of doing something that's Bitcoin focused? And I sort of started to begin to canvas the landscape from a couple different angles. One, just where's my skill set applicable, and two, what is a sustainable business model effectively in the Bitcoin space? Because I think not super talked about, but it's hard to make money in Bitcoin to have a sustainable, profitable business. There's obviously the exchange business that's been relatively successful, but even if you look at a Coinbase, they branched beyond Bitcoin for business reasons ultimately, because the realities of that business is they make money by pushing people out the risk curve, getting them to trade all these other assets. And so that was, I think, part of the incentives for that business ultimately migrating from, at the beginning being very much a Bitcoin business to something much different right now. And so it's hard to make money in Bitcoin is ultimately the end of the story there. So I was looking for opportunities where I actually had confidence in the business itself. And so I heard in sort of April of 2023, Michael Tanguma, who's co-founder and CEO of OnRamp, I heard him on a podcast. I think it was Marty Ben's podcast, and he was talking about launching this new business called OnRamp, and he talked about this concept of multi-institution custody. And I had never heard that before, but it immediately resonated with me as oh, wow, this thing needs to exist, this sort of hybrid approach to custody that's really perfect for, high net worth individuals, but also institutional allocators. And, just for, we can go into this deeper, but some high level context on multi-institution and what OnRamp does. It's effectively taking, Bitcoin's native multi-sig properties and implementing that, basically at an institutional level. So instead of, if you're familiar with Unchained's model, they also use multi-sig. And just for added context here, Michael Tanguma, our founder, came from Unchained. So you can think of OnRamp as a quasi fork of Unchained in the sense that we're using a lot of the same base technology. We're using Bitcoin native multisig, but instead of the end client holding any private key material, we are taking all three of the keys in a 2 of 3 quorum, and we're distributing those across distinct institutions. So OnRamp only holds one key, and then we partnered with other custodians like BitGo to hold the other keys. And so none of the entities in the 2 of 3 quorum have unilateral control of the assets. And that's the key thing that our whole business is built on, this foundation of this form of custody, in the sense that we think it is somewhat revolutionary in that up until this point in Bitcoin custody, you've never really had the ability to have real redundancy or fault tolerance in a custody setup. There's always been a single point of failure, whether that's an individual custodying the asset themselves in self-custody, or you're trusting a counterparty like Coinbase unilaterally to hold the funds and manage that private key material. So you've always had a single point of failure. And what this model allows for is that redundancy, that fault tolerance, and the elimination of single points of failure. And why it's so critical is for, particularly on the institutional side, it's like, and I saw this both at my time at Brown Brothers and then at Coinbase as well, where, again, I was dealing with these large pools of capital who, even if they could get there on the Bitcoin thesis itself, like they knew they needed exposure to the asset, they couldn't get comfortable with the custody because their options at that time, were either trust a counterparty like Coinbase unilaterally, go into something like the Grayscale Trust, which was a poor financial product for a number of reasons, or try to figure out key management themselves, which, for most institutional allocators is kind of just an unrealistic or unpalatable avenue to go down, in the sense of like, if you have an investment committee of 7 people or a board, who's going to be holding the keys? What if there's turnover on the team? Like there's a lot of considerations that make that very difficult. So realistically, like those types of allocators need third-party custodians. But, our thinking was, well, what if there's a way where you don't have to trust one? And so that is like the beauty of Bitcoin itself. Like we're using the native properties of the protocol, multisig, in order to achieve this, something that's not possible with any other asset, right? Like you can't multisig your gold or your stocks or bonds. For stocks or bonds, it's less relevant, right? Because they are dissimilar from Bitcoin and gold in that, they're not finite or scarce or bearer instruments, right? So, when people are diligencing equity or bond managers, like custody is an afterthought in the diligence process, right? Like it's a box checking procedure. Whereas with Bitcoin, custody is actually like the most important thing in terms of a diligence process, because, if you have a long-term, multi-decade, multi-generational thesis on this asset, you need to have confidence and conviction that the asset's going to be there in 20, 50 years. And just, looking at the history of, the past 16 years of Bitcoin's life, it's been very difficult to trust single counterparties. It's hard to get confidence that effectively the exchange or the single custodian will, outlive your ownership of the asset. That historically hasn't really been the case. And so, yeah, like I was saying, like this form of custody is unique to Bitcoin. Like you can't do this with anything else. So that's another reason I just think it's so fascinating. And, really in our minds, this is how the custody space for Bitcoin will evolve, in that it's just a logical, progression of the technology, right? Like we're using multisig, but we're opening it up to multiple institutions being able to basically collaborate and work on behalf of the end client. So, there's obvious mantras in Bitcoin, like not your keys, not your coins, which like I think has been very useful for 16 years because the alternative to not doing that was holding it on a single counterparty, holding it on a Coinbase, which is worse than figuring it out yourself. But now I think there is another option where you don't have to trust a single entity unilaterally, but you can also abstract away the complexity and also the burden of private key management. Because I think, for a lot of people, self-custody is fantastic, and we're very supportive of self-custody. Like I personally will always have some amount of my stack in purely self-sovereign self-custody. but increasingly a majority of my stack is going to be in an on-ramp vault, just because there's a serious burden associated with private key management, particularly as the price appreciates. So if Bitcoin is becoming a larger and larger percentage of someone's net worth, maybe they see the asset 10x or 10x a couple times, like it becomes this pretty large burden in terms of like, okay, I can't screw this up. Or I also, if I'm securing it on private keys in my house, like that's then becomes a risk for the $5 renter tax. Obviously, like, do you want that private key material in your home if that's where your family is, and that's increasingly a pretty sizable amount of money? I think there's a balance, right? Like there's a place for all these different custody formats, and we are certainly not dogmatic about this, but we are just presenting a new format basically and saying like this is an option for at least a percentage of someone's stack, where you can very easily access financial services like inheritance, and have a portion of your stack that you'll pass on to the next generation, right? Because right now, like inheritance is pretty tricky if you're just doing self custody. Even if you can figure out a way to have your loved ones or heirs find those keys and access the Bitcoin, there's questions around the legal transfer of title of those assets. So those assets could enter probate, which is a lengthy, not fun process. So there's other sort of just realities of like tapping into financial services is much easier if you're using institutional grade custodians to secure the asset. And so, yeah, that was sort of the light bulb that went off for me when I heard Michael talking about this idea. And so I just reached out to him cold. I was like, however I can help you build this thing, like I want to be involved because I think this is sort of the future of where Bitcoin custody is going. And yeah, it's been almost 2 years now, which is kind of crazy to think about. It's been a wild and fun ride, but things are progressing very well. Like I think we've certainly found that there's product market fit for this idea, and a lot of that sort of early traction was a very positive proof statement from longtime Bitcoiners, are some of our first clients, people who have been doing self custody for years. They're very technically competent, but they also understand that burden that I was referencing. And they love the idea of at least some portion of their stack not being associated with that burden. And really, you could also just think of it as like a diversification play, with your custody setups. Like, do you want all your eggs in one basket, one arrangement? Probably not. And so that was an early proof statement. As I said, like we're on something here because a lot of our earliest clients were long-term Bitcoiners who had been doing self-custody for a long time, but saw the value prop, saw the merit of this model of custody. And so, yeah, it's been a fun ride.
Amazing. It's really good. I think it's needs, and there's a lot of like, oh, you cannot have self-custody here, or you should not use them. Like there's a lot of like almost like Apple versus Samsung fights sometimes in the scene where I'm like, no, like that's not okay. Like the more different models and versions and companies you have competing for the same thing, the better it is. And maybe with self-custody, if you have all your money in Bitcoin, maybe it's a good idea, especially if you have a lot of money in Bitcoin. I'm probably talking if they have like 5 coins plus, you should think about maybe having 2 completely different solutions, especially like above 10, above 50, above 100 coins, like no question, you should not have everything in one solution. So multi-vendor, multi-institutional, multi-signature, like whatever you can do, spread them out, because it's not as expensive. It's not that like, oh, I'm gonna charge so much, so like that. So that's where I'm standing. I'm like, yeah, try many different things out and see what's the best thing for you, but have self-custody in some form. And in any way you want.
And also like, absolutely, have great reverence for self-custody, just in the sense of like, it is critical to the protocol, like the ability to self-custody asset, going back to its bearer nature, like that call option on the asset is super critical, because in a lot of ways it serves as a check and balance on custodians, right? Because if you always know that the end client can take the assets off the platform, if you are not fulfilling your duties as a counterparty or custodian, that inherently makes them more trustworthy, right? Like they don't want to lose client assets if they are, being a custodian for Bitcoin. So it is, again, this unique quality of the asset that should over time, actually incentivize better behavior. And the really fascinating thing about that dynamic within the context of multi-institution custody is because none of the entities actually have unilateral control, that sort of incentive to be a good actor and act in good faith is even greater than if you are the single custodian. Because if you just, if you think about a single custodian, to quote unquote collude, they don't have to convince anybody. They just do it themselves, right? Whether it's, malfeasance or just negligence, like something could go wrong, again, and you have that single point of failure. Whereas when you spread out that counterparty risk, it becomes much harder for things to go wrong because, none of these entities actually have control to make that type of unilateral decision or to unilaterally screw something up. And so, again, it's just that fault tolerance and that redundancy that I think is super critical. And also just the reality of like, that's how we scale this thing. Because I think there's an argument to be made that the reason we're not already at $1 million a coin is because custody is pretty difficult. And there's been a lot of horror stories. I think we have a slide in some of our decks that speaks to this, but it's like something like $650 billion of losses over time from poor custody. So that includes both people just losing private keys in self-custody or exchange hacks. So a $2 trillion asset, almost 700 billion of losses from poor custody. It's like, maybe we need to like think more deeply about how we're custodying this asset. And that's sort of the stance we've taken is like, it's, we're 16 years in, but we haven't really figured this thing out in terms of how to actually store it. And I think that's part of the reason, at least, we're not already at a higher market cap, because it's very difficult for whether it's a high net worth individual who's going to make a serious allocation, or it's an institution who has fiduciary duty to underlying clients, like comes back to, again, like getting conviction in the custody is what prevents people from, one, allocating, but then two, actually having a meaningful position size, right? Because what we see a lot is on the institutional side is people very much dipping their toes in, right? Like 0.5%, 1% allocation to the asset. The reason that's not 10 isn't because they're not convicted in the thesis. It's because they're not convicted in the custody and that it's going to be there in 10 years. And so they very much view the allocation as a risk bucket, like a risk on asset. And part of the reason for that is the custody. And so I think this is how we scale to these larger pools of capital and allow them to have the conviction, is through this fault tolerance, this redundancy, that they know they can't be knocked out of the game if a custodian fails, right? And it's also like, for, again, a fiduciary or an institutional allocator, like they can come to terms with an investment not working out because they got the thesis wrong, right? What they can't deal with is getting the thesis right, but still having a 0 for the allocation because they screwed up the custodian. That's like what you get fired for. That's when clients leave. Like they can't afford for that to be the case. And so I think, as people get more sophisticated, come up the curve on their education around Bitcoin, it's like very unique custodial properties. I think more and more people are going to adopt this form of custody where the counterparty risk is effectively distributed and you have, again, that fault tolerance.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there. And of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. And make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I'll guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. That's super interesting what you brought up, that not further down, like more market cap in Bitcoin, because it's what do you think is the lack there? There's like two aspects for me. There's the one aspect is the educational side of like, okay, we also had to explain to people how you use a username and password. Now everyone knows how to use username and password. Now we're in the evolution of like having two-factor authentication, password managers, and it gets more and more advanced. Even like non-tech people use those things. This is like the educational part, but it's the other part of it is just like building services, building products, building the technology to make it easier. What do you think is like the bigger hurdle? Is like the educational, the time aspect, or is like we need more services, more products? Is like more technology that has to be built?
Yeah, it's tough to say which is more important because I think it's both. I think the real answer is it's both market structure, the different products and services that are required, and then it's obviously education. But if I had to pick, I would probably say education, just because, you know, we're reminded of this often in the work that we do, talking with institutional allocators. Like, we are still so friggin' early, and I know that's cliche to say at this point, but particularly with respect to like the sort of the conflation of Bitcoin and the rest of crypto, like that's where I'd say we're still the earliest. Is like there's been a lot of institutions or other financial entities that have come into the space and they think they've done their diligence, they think they know what they're looking at, yet they are still conflating Bitcoin with the rest of crypto, and for that reason they view it as a risk asset. And in our view, Bitcoin is really the most like risk off allocation you could possibly have. It's outside money, it's transparent monetary policy, immutable, like all these things we know makes it a risk off asset. And because these allocators are still conflating Bitcoin with the rest of crypto, because crypto is risk on, like it is venture tech, if I'm being generous about it, right? And so by conflating those things, they're just lumping Bitcoin in to this risk on bucket. And I think that's the biggest piece of education that needs to occur, is just like getting down to the fundamentals of how these protocols work. And frankly, it just takes time. And also there's Bitcoin is so multidisciplinary that different aspects of the thesis, different aspects of the fundamentals resonate differently with different folks. People come at this from all different angles. For some people, it's the mining aspect of it that is where the light bulb goes off. Like, one of my favorite things to mention to people when they're very much sort of on the outside looking in and wanting to learn more, is I just talk about mining. And I tell them, for the first time in human history, we have the ability to monetize energy in a location agnostic manner through Bitcoin mining. And like that typically blows people's minds because they don't know how mining works, and they've never thought about this effectively a form of utility for Bitcoin that has nothing to do with its price, or its number go up technology. Like, this is simply just allowing us to be a more efficient species in terms of how we monetize energy. And so that's just to say, like, there's all these different touch points or these different anecdotes that resonate differently with people. And so it's really a matter of knowing who you're talking to, knowing where they are on their journey of understanding. And ultimately, at the end of the day, it does require some amount of curiosity on behalf of the person you're speaking to, because you could try to educate someone, as as strongly as you can, but if they're not willing to listen, it's not going to work. And I think, our other co-founder, Jesse Myers, who you've had on the pod, he wrote a piece, a great piece called the Why the Yuppie Elite Don't Understand Bitcoin. I think he wrote in like 21. And that speaks to a similar concept, in the sense that, particularly in the institutional world, or even just someone who has made a good amount of money in TradFi and are on Wall Street, it's very difficult for them to look at this asset that they have no ability to have an edge on, right? Like, they've built their career probably having like some edge in markets. The other thing to think about there too is, it requires some amount of curiosity on behalf of the person you're talking to. Like I said, like different things resonate for different folks, but you could be hitting someone hard over the head with all the facts in the world, but if there isn't the desire, the intent to learn, it's going to be a difficult conversation effectively. And part of that too is what our other co-founder Jesse Myers has written about in one of his great pieces, I think back in 21, around why the yuppie elite don't understand Bitcoin. It speaks to a similar dynamic of, if you're someone sitting in the TradFi world or on Wall Street and you've made significant wealth from doing XYZ thing in financial markets, it's very difficult for you to look at this thing, Bitcoin, and say, it's just this store value asset. There's no edge to investing in it, right? So all of your preconceived notions about making money in finance sort of fall apart, because there's no edge to it. There's no investment strategy around Bitcoin that you need to really internalize other than buy and hold, which is pretty straightforward. And so folks like that tend to have a difficult time coming around to the thesis, really because it sort of alters your worldview, generally speaking, because it makes you question, what money is, which most people in that world, if you've benefited from the fiat system, you're unlikely to have questioned that throughout your career. And then once you do, it does take a real amount of hubris, or death of the ego, to recognize, like, maybe I was wrong about what money is. And again, like, for someone who has benefited greatly from the fiat system, it's more difficult for them to get over that hurdle, generally speaking. And so that's a lot of what we see on the institutional side still to this day. Like, we do a lot of outbound to institutions, and we still get some responses that are like, rat poison, would never touch it. And it's like, okay, like, I know you have done zero work on this, and that's okay for now, but we're here when you want to think about it, because that's the thing. It's like, if there's no desire there, like, it's going to be a very difficult conversation.
I asked originally, I think like 30 or 40 minutes ago, where if you were in TradFi before because of the ETFs, because I'm kind of interested in your view and insights, what you have with ETFs. I never worked in TradFi, I never had any finance background, and you probably have a better understanding of how long those things actually take, as like 6 months, 12 months period of like talking with those high net worth individuals, talking with those institutions, and then we might see like, ETFs actually come in the swing. And I think that's one thing we kind of get into in the late stage of the podcast now.
Yeah, I think on specifically the ETF front, it's mostly around what I was mentioning earlier, around like there are just certain wirehouses and entities and banks that haven't turned on the ability for their clients to buy the ETF. And if they have, it's in a basically like handicapped way where there needs to be an explicit ask for it. And so I think that will just take time, but it will open up. And I think part of that too is going to be the new administration, because I think the reality of the past 4 years is banks and other entities have been very cautious, not only given sort of the antagonistic stance that the current and soon to be former administration has had towards the space, but also just the reality of like FTX blowing up. Like that was a big moment where people were, thinking about doing something in the space and then ultimately took a step back because of what happened there. And so there was sort of that malaise for a few years around just these entities moving probably more slowly than they otherwise would. And so I think, there is an argument to be made that changes with this new administration. And there's more sort of just welcomed nature towards the asset class. And some of these entities will start turning these things on, or at least, giving their sales folks the ability to go out and talk about Bitcoin with their clients. And so that's one side just on the ETF stuff. Another part of your question, like around sort of just the institutional sales cycle, I think is worth calling out. Like, when I was at Brown Brothers, we would diligence a fund, anywhere from 6 to 18 months. Like we had some very long diligence processes. And that's just kind of the way things work. Like there's a lot of different elements that go into a diligence process, from understanding the investment thesis to doing sort of operational due diligence. All, compliance needs to be involved. And there's many different rungs of sort of approvals. And so I think that's also what we've seen at OnRamp as we go out and we sort of talk with institutional allocators. That has also been the case. It's a very long sales cycle. We've had some success in that side. I mean, just for some high level context on the business, we really have two segments of the business today. Sort of more individual private client focused, which you could think of as mostly individuals, high net worth folks. We technically don't have any account minimums, but there's a certain level where our fees start to kind of make sense. So we skew a little bit more upmarket. And then the other side of the business is institutional. And we've had some success there. Back in November, it was announced. So the first pensions in the United Kingdom to allocate to Bitcoin did so through our OnRamp Bitcoin Trust. So we have a trust vehicle that looks and feels similar to an ETF in that it's a grantor trust structure. But on the back end, we're using multi-institution custody, which what I described earlier. It's also a private placement fund. So that allows us a little bit more flexibility. So we can actually allow for in-kind subscriptions and redemptions. So you can move Bitcoin in and out of our trust vehicle, something that's not possible with the ETFs. And so the pension consultant that we worked with out in the UK decided to go with us. So they diligenced over 80 different sort of Bitcoin trusts or Bitcoin funds to get exposure for their underlying pension clients. And ultimately decided to go with ours because of really the custody is what it came down to, and also that ability to have in-kind subscriptions and redemptions. And so, but that diligence process was roughly 12 months. Like we had been talking to them for almost over a year to get that fully over the line. So these things do just take time, and that's why I think the sort of feel like there's been a meme for the past 5 years of like the institutions are coming. They actually are coming now, but it's still going to just take time for them to sort of get through all these different forms of approvals, do their due diligence, get up to speed. And so, yeah, it just takes time.
Absolutely. It's kind of, I think most people don't understand how early we are, and still the opportunity is huge, like in the very short term, because we have, it's interesting also with corporations, they take time, but we don't know what kind of talks they're into, because we have an amazing example with MicroStrategy that has to be kind of on the radar of almost all the CFOs. Like MicroStrategy a business model before Bitcoin that was kind of slowly getting slower. Like I don't want to say dying off, but it was definitely in the distraction, in getting more and more limited. And now with Bitcoin, since they adopted Bitcoin, they have been the fastest growing company in the S&P 500, faster than any company in the S&P 500. I think they are still not in there, if I'm not wrong.
Yeah, not in
And
the
that
not in the
has
S&P, but I think at the end of the year they got added to the Nasdaq 100.
Yeah, that's an amazing thing. So the point I was trying to make is like there are so many companies that look at those things like a Meta, like an Alphabet, like an Amazon. Especially Meta is interesting because Mark Zuckerberg, the founder, still has so much influence if he really wants to do it, and he might just do it.
Yeah.
He could actually go ahead to an Apple, a little bit more complicated, Alphabet, a little bit more complicated. But those are the wild cards of like, yeah, maybe like we see a Meta saying like, oh, like, let's have like 5% of our balance sheet in Bitcoin. That's just like it's an
Yeah.
absolute wild card.
That would be a shot across the bow for every other corporate in the world. I think to your point, what we've seen so far on the corporate adoption side is like somewhat anomalous. And what I mean by that is like Saylor needed to exist, and he needed to have that level of unilateral control over the decision making. Now, obviously, he like presented the idea, let people get out if they wanted to, but he was going to do it regardless. And not every corporate has that level of whether it's the original owner or the CEO or the chairman of the board having that much unilateral control to make that type of decision. Um, and so I think the corporate adoption we've seen thus far is similar to that. Like if you look at Eric Semler at Semler Scientific, like he also had a similar amount of control to make that decision. I think with these some of these larger corporates like an Apple, like an Alphabet, my assumption is like there's just still way too much bureaucracy and not enough unilateral control by one individual or a consortium of individuals who all have consensus on the idea to make that type of move. Zuckerberg is interesting because I think he has some goats that are like named Maxi or Bitcoin. I forget. So like I'm pretty sure he owns Bitcoin, and so yeah, that one is interesting because he does have enough control to make the move. The other one that's interesting is Michael Dell, which he's been on Twitter the past year or so, sort of highlighting his interest and love of Bitcoin, but hasn't sort of introduced that to his company for whatever reason. So that's another interesting one. But I think I kind of think of it as like almost a barbell of like you're going to have some larger companies do this where they have someone who has enough control. And then the other end of the spectrum is going to be smaller companies where there's obviously an owner, a founder, an entrepreneur who definitely has enough control to do this because it's just a smaller organization. And so that's where you're going to see it sort of mostly at those two ends of the spectrum, like large entity that has control. Yeah, there you go. The goats.
Max and Bitcoin, the goats in
Yeah,
2021 on the
exactly.
high end of the bull market.
Yeah.
It's not impossible that he pulls something out like. But sorry, I didn't want to interrupt you.
No. I appreciate it. I needed to see the goats. But yeah, that's kind of how I see it playing out. Is like you have two ends of the spectrum, like large entity with sort of an anomalous situation where someone has enough control, and then it's just going to be smaller businesses who are adopting this in mass because, and you've seen this to an extent, but you just hear less about it, whether it's a private company or just a small public. But it seems like almost every other day there's a new announcement of some company somewhere in the world adopting a Bitcoin treasury strategy. So yeah, that's super encouraging as well. And Saylor's been not only sort of setting the example for how to do it, but he's just been an educator and just a great sort of ambassador for the asset. And so I think people are picking up on that. It is still shocking though. I'll talk to some normie friends, and like there's still people who have no idea who Michael Saylor is. Like, like have no idea what MicroStrategy does. Have no idea that this has been occurring for the past 4 years, and it's like the best performing stock, and all he's been doing is just accumulating as much Bitcoin as possible. Like, we are still somewhat in an echo chamber or bubble that we think everyone knows who this guy is. Um, I think that continues to change as the playbook continues to play out, obviously, and ultimately does get added to the S&P and becomes harder and harder to ignore as MicroStrategy enters these benchmark indices. What then in turn happens is this flywheel where effectively, anybody who's running an active strategy in the equities world, if they are underweight MicroStrategy relative to the benchmark, that is going to show up on their attribution report at month end or quarter end or year end and say, this amount of negative contribution resulted from the index having XYZ exposure to MicroStrategy and you having zero. So that is something that is part of, what gets talked about a lot is like the career risk of Bitcoin sort of inverting at a certain point. And I think we're somewhere in a gray area where that's beginning to invert, where it becomes riskier to not have exposure to Bitcoin than to actually have than to, put your neck out and say, we need Bitcoin exposure. I think that's in the process of changing. Still early there, but the idea is that as a MicroStrategy enters these benchmark indices, it becomes harder and harder to ignore. And there's also the potential reality that a manager is underperforming due to their lack of exposure. And that's where it really starts to flip.
It's super interesting. I just want to add on that Michael Saylor thing, because I experienced that. I was invited to the 100K party and I told people in my environment, like, oh, I go to Michael Saylor's party, and some know Bitcoin and some are like, oh, wow, crazy. And some were like,
who's
okay,
that?
like who, like you're driving for one party to Miami, like that seems like a little bit ridiculous. And I'm like, yeah, like if you don't know who Michael Saylor is, it does seem ridiculous to fly
exactly,
for one party from Austria to Miami. And I think I don't know what his ambitions are, and if he would even like to do that, but the same thing what Donald Trump did in the election, he kind of should do also for Bitcoin. Like Donald Trump went to Long Ball and all those podcasts, even like Edin Ross, the streamer, and this brought him probably a good amount of the younger male crowd also for Donald Trump, and I think that would help push him, and with that also Bitcoin in different crowds, if he just reaches out to like a Logan Paul and to those like mainstream YouTubers to talk with him. I think that would be really interesting to see. Obviously, I don't know if he wants to do that, and if they also want to do that, no clue, but I think it would be an interesting intersection, and it would definitely be something like I rarely watch Bitcoin content these days. It has to be something interesting because I produce so much. But seeing someone like Adin Ross interviewing Michael Saylor, that would be an interesting combination. It would bring something new definitely onto that. And he does that already, where he goes onto like real estate channels like the Graham Stephan one and then like other ones. So he already kind of does that, and I think he will be a figure and does that in the future also. So he does a great job in doing that.
The one everyone always talks about is Rogan, obviously. I think Rogan had Andreas on back in the day, like I think like 2016 or something. But since then hasn't really had anyone on that is talking about Bitcoin specifically. Comes up here and there in various discussions, but he hasn't had anybody on recently. And I've heard a few theories around this of like, well, why not? It seems obvious that he would. One, I think, Saylor would be an obvious choice. Part of the potential concern there is like Saylor tends to just kind of go on long monologues, whereas I think Rogan really likes to have like a back and forth conversation. So I don't know how that would work, if it would work well or not. I think Saylor would still do a good job, but it's just to your point, does Rogan want to have that conversation where he's getting talked at about the history of money for 3 hours? The other one that comes up is like Mahler's, which I think he would be good on Rogan, able to have more of that free flowing conversation for sure. I'm curious though, like, who do you think as a podcaster yourself, like who do you think would be the best to go on a show like Rogan?
I think first of all, I think it's just a matter of time till like a huge Bitcoin is on. I mean, Jack Dorsey was not that long ago also on there, and he's kind
Yeah,
of a Bitcoiner, but the
they didn't really
conversation
talk
was
about Bitcoin. Yeah,
so like there are some Bitcoiners here and there on there. I mean, Jack Dorsey comes to my mind that was on, but yeah, like a Bitcoin conversation on Rogan. I think actually Jack Mallers would be amazing to have him on. I think it might be from like the energy and the vibe better fitting to Rogan.
yeah,
But yeah, like Saylor would be awesome. It would really be interesting because Rogan is just probably top 3 people or like maybe like a top person of like having conversations with people because just he does it so much with everyone. Would be interesting how he handles Sailor and
yeah.
how that conversation goes. It would be something
Oh, it would be
interesting.
must watch. It would be hilarious at the very least.
Yeah, it definitely would be interesting. I don't know if like Rogan also does that. Like I don't watch a lot of Joe Rogan podcasts. I watch like maybe like 10 or 20 in my life, which is a good amount, but they're not that. So it would be interesting to see a Rogan Sailor one. But I think like more interesting would maybe like be a Jack Mallers one from the energy side of things. Is there
Yeah.
someone else? I'm thinking of someone else. If there's someone that could also be interesting to see in Rogan would be a good fit. And that's the thing. Like, there's so much talk about there are like big big Bitcoin podcasters, and there's like content creators out there. But I feel like there's pretty thin spread still. Like if
Yeah.
you think about who's like Bitcoin's high signal and maxi and who's
I
big,
think
there's like Jeff
one
Booth.
one that comes to mind is Matthew Pines. I think would be good on Rogan, or
Oh
even
yes, true.
any large pod. I think he would absolutely crush it, and just come from a perspective that isn't like sort of overtly like crazy Bitcoin maxi guy. Like I think he could jive with Rogan, and also talk about things other than Bitcoin, whether it's geopolitics or national security, those types of things. Could make for a great discussion.
Did you saw the Raul Paul one on Diary of a CEO? I was so
No, I
disappointed
didn't.
that Diary of a CEO picked him. Like they have so
Tough.
much, so many people to choose from, and then they pick him, and I'm like, because I really like sometimes his podcast. He has some interesting guests on, and he has also a good way of interviewing people. It's very structured and nice, but it's just like. I was like, I cannot watch this guy anymore. Like, I didn't even watch it, and it kind of blew Diary for CEO for me. Like, damn,
Yeah.
it's a good podcast, and now he picks that guy. That now I question all of the other guests also.
Right. Yeah. Exactly.
But yeah, super interesting. One thing I'm maybe before we close up that I want to get into that is like you talked about unit bias, how it also was interesting for you in the beginning. When do you think we shift naturally, organically from like this Bitcoin to Satoshi, or maybe like to a different one away from Bitcoin? Like what needs Bitcoin to hit for the people to say like, oh, like it doesn't make sense to talk about Bitcoin. We should talk about Satoshis.
Yeah, that's an interesting question. I don't know if I have like a great answer for it, but I think my gut says we're a long way away from that, from transitioning to Satoshis, and for a few reasons, but the main one being like sort of a double-edged sword, like the unit bias thing in some way, just like sort of behaviorally or from a psychological perspective, in that yes, for a new entrant, they are attracted to something that is a smaller unit because they with their lack of knowledge of supply of the asset, they just think, okay, lower, better, has more upside potential. So that's the issue with the unit bias. But the other reality of Bitcoin, and it's like, price above 100K, like there is a positive element of that large number. And I don't think we can discount that because, however long the journey from 100K to a million to then 10 million is, like those are psychological markers that are important for future adoption in my mind. And so I don't think transitioning to a smaller unit makes sense really within the next several decades. Like, I think it takes a long time for that to be, and part of it too is probably also like increased adoption from a medium of exchange perspective, where if you're, and again, this is like far into the future, but denominating in Bitcoin, using it as a unit of account and a medium of exchange, then yeah, maybe it makes sense to scale down the unit to a Satoshi or something else, just for ease of use and ease of medium of exchange, basically. But I think we're a ways away from that. And the other part that I would emphasize is like, I do think there's merit in the large number bias of like, oh shit, this thing's at 100K now. Maybe it can go to 1 million. Like, I think that's the psychological barrier of 100K is important for a lot of reasons, but part of it is just for everyone who thought it was going to zero and would never hit 100K. Well, it did. And so now that sort of flips your thinking to like, well, okay, maybe this isn't going to zero, but does this now mean it's going to 1 million? And so there is sort of behavioral and psychological aspects to both sides of the unit bias thing. And so I would be surprised if we move off of that anytime soon, basically.
Interesting. I always had a different opinion on that. I will just quickly explain because I thought because of exchanges, and we see actually some exchanges already doing that, displaying it in sats, and usually you can switch around between sats and Bitcoin. But my thinking was like, okay, once we cross like 1 million, before that, I don't think it will happen. But once we cross that 1 million, the people that enter into a Bitcoin wallet on like an exchange or something like that, and they buy like, I don't know, like $10,000 or like even $50,000 of Bitcoin. If Bitcoin is at 1 million, they have like 0 point and 0. Like the number looks so small, and that's why I thought like above 1 million, exchanges will slowly start defaulting to satoshis just to give the user a better feeling of like, oh, you see here you have a 200,000 satoshis and not like 0.0 like that.
Yeah, it's a reasonable thought. I also think there's probably there's probably like a period of time where it's both, right? Like, it's not one or the other. And there's sort of a transition period that could take many years, where some people are using a different standard and some others are not. I think what I also come back to is like, we kind of just need to do a better job on the education front. Like, I've joked about this in the past, but like, we need some PSAs in Bitcoin that are like, there's only 21 million. And another one is Bitcoin is divisible. Like, you don't need to buy a whole Bitcoin. Like, there's still people who think you need to buy a whole Bitcoin, which is unfortunate.
What is a PSA? Sorry.
Public service announcement.
Oh, interesting. Public service announcement. Yeah.
Yes.
Yeah, it's the next thing, right? Like, if you display satoshis, do people don't buy it because they want to buy Bitcoin? Like,
right? Yeah, exactly.
Some people don't get it, maybe.
Yeah, that's a good point too.
It's like, I think it's really legit because I remember like 1 year ago, an old friend of mine texted me a weird message I couldn't understand, and he was like, oh, like I bought Bitcoin, but I'm not sure which one to buy, which Bitcoin to buy.
God.
And I was like, okay, which Bitcoin to buy? Like, does he think of like Bitcoin Cash? And I said like, oh, like what kind of options do you see?
Right. Yeah. What are you looking at?
What are you looking at? And he's like, yeah, there's like an orange one and a green one. It's like, so I think we really need like we often are way too in the bubble, and we have to hammer down those fundamentals of like, it's Bitcoin, not Bitcoin Cash, not Bitcoin Satoshi Vision, not Bitcoin anything. It's Bitcoin and Bitcoin only. It's also not Ethereum. It's Bitcoin. And then it's like, yeah, it's capped with 21 million. One Bitcoin can be 100 million Satoshis. So like, if you buy a Satoshi, it also is a Bitcoin. So like those fundamentals. That's why I also only recommend Bitcoin only stuff like exchanges and stuff like that. It has to be Bitcoin only because then they cannot buy the wrong Bitcoin, which happened in the past. So we really need to have education is so underrated still, even though Bitcoiners are quite good in that, and we really have to stick with the fundamental basis. Yeah, really
totally
cool.
agree.
Really cool. We have one question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
What can you learn from me besides Bitcoin? I think this is true of various folks at OnRamp, but I think one thing we've tried to coalesce around is finding people with expertise and background outside of Bitcoin. And so that's sort of my career journey that I walked through earlier is, I have sort of this basis and this foundation in the traditional world, and I've made the jump to Bitcoin over time. And I think for what we're doing at OnRamp, like that is hypercritical to have multiple people on the team, not just myself, have that expertise and background outside of Bitcoin, because ultimately what we're trying to do at OnRamp is bridge these worlds of traditional finance, basically fiat capital that is going to sort of via osmosis, flow into Bitcoin over time. But there hasn't been a lot of companies that have done a great job of connecting those two worlds. And so I think part of what, folks can learn from me and other folks on our team is how to make that connection and how to, because what that ultimately allows you to do is kind of what we've been talking around, education. It allows you to socialize these ideas around Bitcoin in a more palatable way, because I think one thing that often gets missed in, people orange pilling folks or trying to get their friends and family to buy Bitcoin is like, you really have to meet people where they are in terms of their preconceived notions, their understanding of markets, their understanding of money. And there's a delicate balance between, basically not being overly aggressive with someone and not, telling people to have fun staying poor, or that they need to put 100% of their assets into Bitcoin right now. Like there's a much more delicate way to go about things. And I think our ability at OnRamp to do that is a function of our expertise and background in the traditional world, and being able to sort of meet people where they're at and actually provide a bridge to this world.
That's very true. I searched for one more thing, and I want to show you this. I don't know what you think about that. There is the really nice movie actually around the founder, the McDonald's movie.
Oh yeah, I've seen that.
And you just look exactly like him. Like you.
I haven't gotten that one before, but I'll take it.
Really, like it's like that the whole time I had to think about like how he what is his name, and now I searched of like you look exactly like him. Sorry to bring that up, but yeah, it's like it triggered me the whole time in the recording. I'm like,
I'll take it. I'll take it,
almost
man.
like that. Yeah, he's a great guy in the movie that says like, you don't make the money. I don't know what the exact line is. You don't make the money with like the burger flipping. You make the money with owning the real estate,
right,
and having the business on top of that, which was an amazing insight. And there's some meme around that converted to Bitcoin. I think there's some really cool thing about that. Yeah, but yeah, thank you so much. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And your question from the previous guest is, if you had to choose just one thing, what would be your number one life hack?
Life hack. That's tough. Life hack is waking up early, getting a jump on the day, because I think it just allows you to get in a good frame of mind, whether it's getting a workout in the morning, or just being up ahead of everyone else. It just gives you it even if it's just mental or psychological. You're like, oh, I got an extra hour on everybody else in the world right now. And so that's one thing I've tried to internalize over time, is just get started early, get started cranking, and that'll basically help you have a better day.
Amazing. When do you stand up?
Depends, but early as possible. I mean, 6, 7 a.m. around there.
I love that. Yeah, I also stand up 6:30 usually every day. It's funny because it's like like from a logical standpoint, it shouldn't matter like when you work and when you sleep.
Right.
But
It's
like,
psychological though.
but going early to bed and waking up early and starting, like, it's just a way better day. Like if I wake up at like 6:30, it's a better day compared to when I start the day at like 7:30. It's not like even an hour later makes all the difference, at least for
100%.
me.
100%.
Really cool. Then thank you so much, Brian, for being on my show. Before I let you go, where can people find you, ask you questions, reach out to you?
Yeah, sure. So you can find me on Twitter at /BTC, at the word / spelt out BTC. And then, yeah, to learn more about OnRamp, you can visit our website, onrampbitcoin.com. You can also subscribe to our newsletter there. We put out sort of weekly content and research. And yeah, reach out to anybody on our team if you want to learn more about our services. But thanks for having me on, Robin. This was fun.
Thank you so much, Brian, for being here. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.